Hello and welcome to the Weekly Market Commentary. I'm your host, Alex Chalekian of Lake Avenue Financial. Let's review the markets from last week. The major U.S. equity markets closed higher. We had the S&P 500 go up by 3.12%, the Dow was up by 3.89%, and the Nasdaq rose by 2.43%. We also had some major economic reports last week. We saw the unemployment rate at 5.7%, the average hourly earnings rose by 0.5%, and international trade dropped by $46.6 billion. Now let's take a look at our focus list for this week. At our last video, we talked about the Shake Shack IPO and the frenzy that ensued. We saw shares start to come up all the way to a high of $52.50. Now shares have declined over 20% since that high. We always want to try to avoid these types of IPO frenzies and look at it once the storm has passed. Last week we talked about Apple raising cash with their bond sale. Now they raised billions of dollars this way. And what do they need all this cash for? They're already sitting on over $170 billion in cash. They could go out there right now and buy a company like IBM just with the cash alone. Or possibly take out their competition, Samsung. Or even buy AT&T. They can have their own wireless carrier if they'd like to. Think about this for a second. They could basically buy Sony, Nokia, LG, and BlackBerry together and still have over $100 billion in cash to use for whatever else that they want. So here's where it becomes concerning. I don't know if Apple's really innovating anymore, okay? They have had a lot of different phones and a lot of different items that they've sold over the years, but it seems like as the years have gone by, the iPad is getting smaller and smaller and the iPhone is getting bigger and bigger. I have in my hand the original iPhone. I was one of the early adopters of this phone at the time when BlackBerry had the biggest market share. Most of my friends that had a BlackBerry thought I was crazy to make a change, but I did. And now times have changed and it's the opposite world that we live in, where BlackBerry has a very minimal market share of the smartphone world and Apple is the dominant force. Now you see that they have the iPhone 6 Plus. This is on the other end of the spectrum of where iPhones originally started. You can see how we went from a small phone to the big phone. And as I mentioned, I don't know how much more innovation is going to happen. We're going to eventually get to the situation where we're going to have an iPad with some phone functionality. And this is eating away from their Mac sales as well as their MacBook Air sales. Last week we talked about Chevron being undervalued. Shares were trading about $103 at that point. Now they're over $110. So you can see as oil prices have moved up, share value has moved up as well. On Friday, the U.S. Bureau of Labor Statistics Employment Situation Summary was full of encouraging data. Employment numbers for last November and December were revised higher, which made 2014 the strongest year for a job growth since 1999. So consumers are happy, workers are happy, who's not happy? The answer may be companies and investors. Barron's speculated workers' gains could come at the expense of corporate profits. Last week, analysts expected to see year-over-year declines in both the overall earnings and revenues of companies in the S&P 500 index during the first half of 2015. The downward revisions primarily reflect the expected performance of companies in the energy sector. Now, while prospects for the first half of 2015 have dimmed a bit, analysts are expecting profit margins to expand and companies to have record earnings during the second half of 2015. Thank you for watching our video. We'd love to hear your comments. Please remember to visit our website, lakeavfinancial.com. There you'll be able to find our blog posts as well as subscribe to our newsletter. You can also find us on Twitter, Facebook, and LinkedIn. And remember, at Lake Avenue Financial, we manage your wealth with your goals in mind. Thank you for watching.